Welcome back to the Malaysian Money Matters show. It's the 4th of December 25.
And we're here to do a deep dive into the top corporate and market developments, plus the major political headlines, to give you the key context you need for the day.
Okay, let's kick things off with some pretty serious pressure points. The news coming out of the Genting camp is, well, it's more about debt risk than resorts right now.
Right. CreditSights is basically warning that the parent company, Genting and Genting Malaysia, are at high risk of a ratings downgrade.
And it's because of high debt and weak cash flow. They've actually breached some key trigger thresholds.
Yeah, from Moody's and Fitch, and that's based on their results all the way up to the third quarter of 2025.
So this really overshadows any good news, like that huge $5.5 billion New York casino project they're planning.
It does. The big question is, how do you fund that kind of aggressive growth when your balance sheet is already flashing red flags?
Well, on a brighter note, let's talk Magni-Tech Industries.
The garment and packaging manufacturer.
Yes, they reported a strong 24% rise in net profit for their second quarter. They even declared a 3-cent dividend.
But the interesting part isn't really the operations.
Exactly. That profit bump was largely due to a net forex gain of, RM 5.91 million?
Which just shows you how much Malaysian corporate profits can swing based on foreign exchange movements, sometimes even more than their core business.
Okay, let's shift over to infrastructure. Advanced Holdings, they secured a second favorable adjudication award.
Right, for about RM 3.33 million in a payment dispute over its ECRL project work.
So that confirms they're entitled to the payment, which is a nice cash flow boost for them.
It is. And speaking of boosts, there's some very strong news for Wasco, the energy services firm.
Oh, the modules construction contract.
Yeah, from Technip Energies Italy. The expected revenue could be up to RM 826 million.
Wow, that is a huge contract.
It is. It's expected to contribute very positively to their earnings over the next 37 months.
Okay, so it's not just corporations feeling the pressure. There's a lot happening on the political front as well.
A lot. We have those scheduled charges today.
Right. Datuk Seri Shamsul Iskandar Mohd Akin, the Prime Minister's former senior political secretary, and the businessman Albert Tijian Cheng.
They're scheduled to be charged for corruption under the MACC Act 2009. And what's crucial here is that the MACC clarified something important.
About the Whistleblower Protection Act.
Exactly. They clarified that Tai is not protected under the act because he was involved in the offense itself. That sets a really important precedent.
And we also have a pretty significant government appointment, Tengku Zafrul Abdulaziz.
Yes, he's been named the new chairman of the Malaysian Investment Development Authority, MIDA, for a 2-year term.
Which feels like a move for continuity, right?
I think so. I mean, he was a meaty minister when we saw record investment inflows, so his appointment signals a clear commitment to that same proactive strategy.
Now let's talk about something that affects, well, almost everyone. Consumer debt.
It's a huge number.
It is. Malaysian households now owe a combined RM 54.9 billion in credit card and buy now, pay later debt.
And that's why the government is introducing the Consumer Credit Act 2025.
To regulate the non-bank BNPL providers.
Right, to mandate responsible lending. It's all about protecting consumers from getting trapped in excessive debt.
And one last policy shift. This one in energy.
A big one.
The next bidding round for large-scale solar projects will now require battery energy storage systems, or BES.
This is policy basically accelerating technology. It tackles the big stability problem with renewables. The fact that the sun isn't always shining. It's about future-proofing the grid.
So let's connect all this to what's happening globally. In the U.S., private payrolls actually unexpectedly decrease.
By 32,000 jobs in November, as the ADP report, it signals a potential softening in the U.S. labor market, which is a key indicator for everyone.
Meanwhile, there's pressure on India's currency.
Yeah, the rupee fell past the 90 per dollar mark. This is tied to delays in a crucial trade deal with the U.S.
And that stalemate, combined with high imports, is really weighing on their exporters.
Absolutely, and it's contributing to a record trade deficit for them.
And finally, let's look at China. It seems they're likely to chase a 5% GDP growth target in 2026.
Which means Beijing is committed to stabilizing its economy. They'll have to keep fiscal and monetary support open to end that deflationary spell.
And if China is actively pushing for growth?
It signals a potential increase in commodity demand. That's something Malaysian exporters like Magni-Tech we just talked about really need to be ready for.
So we've seen everything today, from corporate debt struggles and new policy appointments to, consumer debt protection and these global trade tensions.
Absolutely. And if you look across all of it, Genting's debt, the consumer debt ceiling, that new BES requirement, the common thread is a shift from pure growth to mandates centered on risk management and stability. That's the crucial factor for you to navigate this market in 2026.
If you found this deep dive useful, make sure you subscribe to the Malaysia Money Matters podcast.
Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.